Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. I am so glad to be back making videos again. Sorry for my absence in these most important days. I was undergoing eye surgery, but I am good now. Where to even begin? The fact that market acted surprised CPI data was bad, or the likelihood that things are about to continue getting worse, and once perma bulls give up on their unrealistic hopes of continuous infinite growth, the market will completely sink and collapse? One of the most important phenomena in the markets is the S&P 500. It serves as a great barometer for confidence in the market. We have talked a lot about psychology and perma bull investors, particularly retail investors, who came into the stock market just a couple of years ago. In the past couple of months, dating back since November, we have seen declines in the stock market, erasing trillions of dollars since last November. But in this decline, we have also seen large bull runs. These bull runs are not the product of bullish events or anticipation of a progressing economy being restored to balance. Instead, what these bullish runs represent are defiance. Perma bulls, which can be summed up as an investing body that is always bullish no matter what, are under the belief that enough people will continue buying and upholding all support levels regardless of how bad things may get. The interesting thing in the stock market these past couple of years has been how bullish sentiment has slowly eroded the ability of investors to make investment decisions based on logical. Being bullish on stocks long-term makes sense, but investments in questionable stocks and other securities leaves any rational person thinking, what exactly would it take for bulls to more or less give in to the bear market and stop holding? What would cause people to panic sell in large droves? For months I have been questioning that myself, and I still don't have one single answer, but looking at the SPY chart does give me some clues as to what this might be. You see, every single bull run after markets turned bearish has been smaller than the previous. Because SPY can be used as a sort of barometer into investor psychology, one can reasonably argue that the inability for bulls to make real progress in the stock market means that bears will eventually erode the bullish strength and drive the price of stocks significantly down. This to me makes total sense, and it appears that the biggest institutions and credible investors also agree with me. Renowned names and institutions such as BlackRock have said they think the economy is due a bloody path down the road, and that they are not interested in starting to buy the dip at any of these levels yet. My confidence in the economy remains the same, and the latest CPI report validates everything I have said since the last one. Remember how markets turned all green and happy because the previous CPI report was lower than the last? All of the sudden, the corporate media was making big impressions that the economy was on pace to grow, that the worst was behind us, and that we need to begin to be more optimistic after months of constant pessimism? I made many videos mocking this narrative, calling that lowered inflation report not indicative of a real turnaround of economic conditions. Well, here we are now, with higher inflation and the people tuning to corporate news scratching their heads as to what exactly this means. So let me give it to you plain and simple. In case you missed all the videos I have been making, China is doing really bad, and there is a global transition taking place in terms of sectors of production. China's economy is not progressing as they thought they would, international relations are souring as agendas between the West come into conflict with the plans of Beijing. Russia's supposed week-long takeover operation of Ukraine failed, and now a years-long conflict is here. This destabilization of balance will bring changes of such significance that Europe and the United States will never be the same. Russia is a huge exporter of energy and grain along many other natural resources, and Europe is nowhere near prepared with the adequate foundations to be self-reliant and sufficient to survive on its own without the importation of Russian energy. This will bring cataclysmic changes to all worldwide economies. You will hear analysts in Wall Street say that because the US has little exposure to Russia in our economy, we are going to be fine, but this is nothing but a lie by the corporate media machine to drive in two goals. The first and lesser important one is to get investors to continue buying the so-called dip. Retail money for the most part is more volatile than institutional, and more prone to make quick sensitive changes. Smart institutional money loves this because they manipulate stock prices to ensure that people lose their investments. The second and more important goal is to increase the impression of control. This is why you see the White House playing and altering the definition of a recession, along with the media also playing ball. The thing is, a bear market is not the end of all things, and an economy can easily survive it without having extreme changes. Prolonged bearish conditions can be managed over time until things get quote-unquote fixed and you get a bullish market again. But for this to happen, What matters most is to keep the people in check. You cannot have panic at a disco because it's virtually impossible for a government body to retain control. If all of a sudden there is chaos, it's impossible to control. People cash out of investments. Institutions don't want to lend. People stop putting money in the system, and the US along with other nations will head into a recession steadfast with no stops. So, through careful deliberation, alternate narratives and decisions will be made in order to ensure that the United States economy crumbles but at a manageable pace. In this, I want you all to remember my Evergrande videos. Remember how we talked about how China is ensuring Evergrande's collapse to happen in predictable and slow changes. This is because China will find it a lot easier to manage, and the same thing applies to our government. So with Europe in peril of quite literally getting their lights switched off, Russian economy devastated by the endless sanctions imposed to them, America's inflation out of control thanks to years of irresponsible Fed money printing, and Chinese's production and manufacturing dominance slowly transferring to other countries like India, we end up where we are. I am sorry. I laugh in the face of people telling that I should be bullish because job reports indicate that unemployment is low. Don't get me wrong. I think it's great there is a competitive labor market out there for people to earn a living, but if you actually look back to other previous recessions, unemployment was also very low before markets collapsed and people were let go. And because of all of this, I am now more certain about MOIS than ever before. Sentiment in meme stocks has been floored these past couple of months. Regardless of each individual's opinion, many are uncertain about the ape shares, questioning the impact it will have on the AMC squeeze. Watching the stock price fall and the billion of speculation and theories by YouTubers fail back to back has made many uncertain. I am not saying most have sold, but it is clear that the energy and optimistic once had has been diminished. And yet, it is now that I think GME and AMC are at their best. You see, that last earnings report by GameStop really changed things around. The amount of people directly registering their shares is increasing exponentially quarter by quarter, and this is going to be causing serious headaches to hedge funds, because liquidity and ability to find shares is going to continue to get harder and harder. If stocks in general begin to fall rapidly, and GME and AMC are dragged down, the large amount of investors in them will uphold the value, not selling anything. In fact, any significant decrease in GameStop price in particular will quite literally eat into market makers' ability to manipulate prices. It means more directly registered shares will be owned by retail. We are quite literally now on a countdown towards MOIS. It's hard to say what will happen when we prove we own the float, because honestly, the answer that nobody wants to hear is the one I think is likely to take place. People assume that banks and hedge funds will run out of money and then on some random Monday their investment accounts will grow into millions and they will be rich. I think these institutions are going to fight nail and tooth, and the real battle is going to be taking place in the courts. They will bring up every single argument they can make, from retail and influencer market manipulation for covering MOIS, to saying people should be allowed to directly register shares because it affects whatever dynamic in the markets they decide to fill in the blanks with. The point is, this is going to get real ugly, but for our part, I think these current circumstances are the worst. The people that are likely to sell have most likely already sold, which means we are the few and willing investors crazy enough to hold down to the penny if that is what it takes. The lower GME goes, the faster directly registered stocks will mount up, which in turn will cause huge headaches for hedge funds because then how can they explain the price staying at 30 when the people who will quite prove to own the entire float have a selling price of a 100 million, for example? This is what we have always said would happen. We have been talking about a bear market since summer of last year. People just wrongly underestimate the timing. This is not going to take just a couple of months. This is a huge phenomenon that will take years in the making to materialize into what it will become. This is also not going to take place in the way we would like for it to be, so expect headaches and pains to happen. It's why I tell people to diversify portfolio, get in other plays, do other things and don't just hyper-concentrate on GameStop or AMC alone because honestly, it can really drive you crazy. Personally, if you follow me on Twitter, I post some screenshots of my own GameStop purchases there all the time. I keep it real and transparent with you guys as always. Tomorrow I plan on making another quick little video. Today I just sort of wanted to give you a general impression of how I feel about the CPI report. I find no need in covering the details since it's been days and you must have already read or heard all the intricate details in it. Tomorrow we continue to delve deep into research, real estate in particular, among other things. Today I wanted to keep it super basic and simple, returning with a recap of sorts on how I stand with things. Join my Discord linked in the video description. There we have a very active community made up of over 8,000 members invested in GameStop and AMC such as yourself. We also have a large group of day traders under the service Trade Pass. Come check it out. Our day trade alerts are incredibly accurate. You can see all my alerts dating back to almost January of this year. If you are looking to make money while holding GME and AMC, you must 100% come check it out. And yeah, that's all I have to say for today. I hope to see you guys on the next one. Enjoy the rest of your day and to the moon.